I've always thought of tea as like flavored water.
It's bougie.
This Week in E-Commerce, episode 144, and we are well on the other side of end of financial year sale now as we get stuck into H2/H1, depending on your point of view. Alex, how are you going?
Good. Yes, we are in H2 tax time.
Yes.
And for me, this is always when end of financial year sales should be, because you've worked out how much tax you're going to get back and you're like, great, let's go. And people book holidays this time of year typically. Maybe a car, that would be nice.
That's a really good shout out, actually. I'm curious about that. And you know, I've never really thought about that. Why do we do it in June? I guess it's to close out the year, get everything into the accounts for last financial year. But like you said, for the consumer perspective, this is when you get your tax refund. And this is when you go out and, you know, buy your new OLED TV, which is what I'm looking at currently. So
it's also a great time to be on Facebook Marketplace and resellers as well, because you know, the traders will buy the new tools, they'll sell these ones on Marketplace because they've got the new financial year. So yeah, that's what I'm kind of being.
Great advice. Well, if I am in need of a bandsaw, I will be looking on Marketplace for someone's used bandsaw. But in the meantime, though, we're going to get straight into it. And a lot of stories this week. The first one, which we're going to cover off, is Country Road has made their managing director, Helen Wright, redundant after 18 months in the job. So she joined in March 2025 and held two roles as the chief product officer, as head of product, but then also the GM, overall management of the business. But it looks like they've made her redundant and split her role into two now, with a chief product officer to be confirmed and a GM of apparel and accessories, Shani Delagi. Alex, what do you make of this? Do you think things are going okay at Country Road?
I'm not sure about any of that. I think it's more just interesting where one role's replaced with two. And normally that's, you've done an awesome job. They've had to, you know, bring two people in to replace you. But in this situation, it's a replacement in the sense that they've made you redundant. So that piece is interesting. And she's only been there for, I think it was 18 months, right?
Yeah. And I think part of this, from my perspective, it kind of looks that they were realizing that, okay, well, we've got someone who isn't really looking after both these areas. And you look at the chief product officer and a general manager of apparel and accessories, that's clearly a product thing. So it feels like they realized that the managing director was too focused, maybe not on the product, whereas where they're headed, it needs to be focused more on product. So something to think about in terms of like what your org structure looks like and making sure all the right functions have a seat at the table.
100%.
Now, a second quickie for the day. Myer have added 25,000 products to their new look marketplace. The Myer marketplace story just keeps growing and growing and growing, and sales are up 41% in FY25. I dare say they're going to be up again since they're investing so heavily into it. Alex, the marketplace boom in Australia.
I know. It just feels like we're talking about Myer every week. And I think I've said that before as well at this point too. Growing and growing, a lot of investment into their marketplace, and it seems to be working. So it's a pretty cool piece for them as well as the beauty marketplace as well. They're really trying to push into that beauty space.
Yeah, and one of the key stats of this is that 80% of their marketplace shoppers also buy on Myer as well. So they're cross-shopping across both platforms, which is obviously a huge win because it's helping them just, you know, increase the LTV and retain that customer.
Correct, yeah. And that Myer One, I think it is called, their ultimate membership subscription, their database would be massive.
Yes.
They keep on growing it, right?
Absolutely. Okay, our third quickie. T2, and we were divided about the story because I quite like the story. You thought it was a bit of a nothing burger, but T2 have turned 30 and have reported their strongest financial performance in more than a decade, with their EBIT up 20% year on year. Now, I just think it's remarkable that T2, who sell, let's face it, the oldest commodity in the world, which is tea, are still performing this well, particularly in a category which is, you know, fundamentally challenged by the current macroeconomic conditions.
100%. Like, I think when I put it in the run sheet as a question mark, I think that I love T2. I just wasn't that excited by it. But to your point, you know, like Australian business, to make it this long, to keep something that is not that new and exciting, still fresh and exciting and branded, where there are a lot of competitors that have been in this space for a very, very long time, right?
Tetley's, Lipton's, like you can buy the exact same product for like a fraction of the price, but they're growing.
Yeah, 100%.
I think a lot of it is the whole experience around what they've built. Like the stores are actually legitimately amazing. You go into any T2 store, you can try all the teas. They're beautifully laid out.
Mm.
It's a whole experience. There's a whole retail theater to it, which I love about it. And even like when you buy the products from there, they're so like extravagantly and over the top boxed. Like, have you ever got tea from T2 before?
I will shout out Convert Digital got me a little goodie bag for iMedia this year, and one of them contained like an all sorts T2 box. Anyway, I've been obsessed. So I'm trying all the new flavors. It's amazing. But that's only happened for me the last couple of months, right? Before that, I hadn't really tried T2.
I've always thought of tea as like flavored water. So yeah, I'm not a huge tea drinker, but when you give me a T2 bag, it's like it feels a bit luxe, right? So
Yeah, 100%. It's bougie.
all right, our fourth quickie for the day is in the US, they recently had their Prime Day sales, which actually coincided with a bunch of other things, Memorial Day, World Cup, Father's Day, and Amazon ran Prime Day, and US online spending hit $26.4 billion, which is up 9.3% year on year. And BNPL also jumped 9.5% as well. This is huge numbers, but I think I'm in kind of two minds about this one because it's all concentrated around a sale period. But Alex, what's your takeaway for Australia?
Yeah, I mean, it's always interesting to look at what's going on in the US, right? The increase in buy now, pay later always just, I think, just to my gut makes me a little bit worried to see that growth over the overall spend. What's your take, Mel?
I think for me, it's the fact that yes, buy now, pay later, but again, we're concentrating more and more retail around those peak periods as well. So mid-year was never really a huge thing in the US, but it has become one over the last couple of years. Australia, we always did our end of financial year sale. Now you're seeing in the US, they're having to do that now as well. It kind of just speaks to where retail is at, where a lot of retailers are having to leverage these really peak moments to be able to clear stock. Even with some of the big marketplaces and retailers over there, like Nordstrom, they're about to launch their huge anniversary sale, which for them is the equivalent of Black Friday. It just kind of speaks to the retail conditions right now, and that people are just waiting more and more for a bargain unless you can position your product as a thing of need. One thing, though, which has become a category of need, though, is apparently toys. And in particular, adult women buying toys. And I mean just like general toys, not adult toys, or it could be as well, right? But they have shown 16% growth in the toy category, primarily to adult women. So I think, again, there are some products which are breaking through and people are realizing, actually, I need this in my life, like a Labubu was 12 months ago.
Are we talking like Lego and those types of toys?
Yeah, Lego, soft toys, plush toys in particular. I think sales are up over the 16%. So it's a huge market, which is growing. And I think more and more adults deciding to buy toys. Like even a lot of adults I know are buying collector cards, like basketball cards, baseball cards, that sort of thing. As well as like, Funko Pops, not necessarily Funko Pops, but sort of like figurines and things like that. So I think it seems to be a growing market to kind of play to people's more playful, youthful side.
Yes. Yeah. What was that called before? Like child adulting or something? Chadulting?
Kidulting.
Yeah, that's it.
The kidulting trend. Yeah, yep. I think it's still booming.
Yeah, I agree.
Yeah, I think as people have fewer and fewer kids as well, they're looking to spend some of this on themselves as well. I know quite a few adults who are childless who spend a shitload on these sort of things.
Yeah, must be
Okay, getting into our deep dives, we have a double one to start off with, which is the dual topics of Betts and Stax, who have both in the last week continued to be in trouble. So Stax, we talked about last week, they are now going to a fire sale. They are on sale now. And Betts at the same time, on the very same day actually, have announced a managed restructure of the business. So on the Betts side, they've appointed pitcher partners to help with the administration. They've closed 20 of their remaining 35 stores and are pivoting more towards an online business. So claiming that it's about streamlining the operations, not necessarily winding down. But then in parallel with it as well, Stax have also not only entered receivership, they are now formally on sale as well, closing one of their two remaining stores, and all online trading paused. And a lot of orders and a lot of angry customers who ordered during this trading halt and have not had their orders fulfilled. So it's kind of like I'm not sure what, there's kind of two bad stories here, but one of them is a little bit more positive than the other.
Well, I kind of think the age and the longevity it speaks volumes here, right? So Betts is 130 years old. Have I just pulled that out of nowhere? Is that too?
You're around the mark there. 1892, they started in Perth. 134, yes.
134, right? Like that's amazing. That's incredible. Australia, that resonates in Australia more than a newer brand like Stax, unfortunately, right? Even though we know Stax really well in the e-commerce world, it's less kind of that table conversation. Potentially with that D2C focus as well, whereas Betts has always had an omni-channel. Maybe if they're starting to, like you said, streamline, that will start to help. Whereas Stax kind of were D2C, then became stores, and now they're in the position that they're in. So I see the similarities, but I do see the differences, and I'm hoping those differences help Betts in this situation for sure.
Yeah, I think for Betts, it's more about restructuring the business, like they say, to actually become a little bit leaner. They had a massive store footprint, and it's also showing that you can't have that big a lease footprint. It's a big drain on your cash flow. So concentrating more around perhaps just your more profitable stores makes a lot of sense. Transitioning to online, yes, as well. One thing which has been talked about a little bit is the rebrand, which was undertaken earlier this year to kind of pivot Betts more towards fashion and the masstige, market, mass prestige market. Do you think that's had any impact, or that's contributed to this? Like, strategically, do you think that was actually the right move for Betts at the time? I know we talked about it, several months ago now.
Yeah, look, I think it was the right move. I think it's brilliant. Like the site's amazing. The product's really, really great. Like genuinely. I know a lot of friends that have shopped it. So it was a bit of a shock for me, to be honest, just off the back of that rebranding going, yay, like really seeing this new step forward. So do I think it contributed? Yes, but in a positive way. I think if anything, it's given them more like a longer life, hopefully. But let's see.
Yeah, I think there's a lot of brand equity which they built up in that more traditional space around like school shoes, right? And I think that happened about 8 months ago. It takes many, many years for this sort of transition to happen. So I wonder whether it's actually a little bit of the right strategy, but way too late. And it just hasn't had time to properly bed in yet. I also wonder whether the decision to completely can school shoes and the more traditional markets from the get, rather than having to phase it out, whether that might have been a better move. I'm always a big fan for like ripping the band-aid off, but sometimes it's like that band-aid is kind of like holding your cash cow together. But it's always an interesting one. And on the Stax front as well, there's apparently quite a few competitors and brands who are circling around, potentially looking at buying this as well. It turns out when looking at the numbers, that Stax have actually been wildly unprofitable for about 3 or 4 years now. So just looking at the numbers, which was released by the as part of the sale, they've been unprofitable for 3+ years, also spending more and more as a percentage on marketing as well over that period. And activewear is such a competitive market that all these numbers, when I look at them, I don't know how someone would value them, but I look at it going like, well, it's you can't value them on EBITDA, so you're going to have to look at a multiple revenue, but it's also so heavily reliant on advertising and marketing. And looking at some of the consumer feedback as well, people not receiving orders for several months, people placing pre-orders are getting told that things are sold out and then receiving no notification and finding an absolute nightmare to actually get a refund on that as well. I think there's a lot of customer goodwill which has been lost in this as well.
Yeah, and that's probably just every day kind of it makes a difference here. If they kind of got on top of that earlier, then potentially there'd be more to the value in that resale.
Yeah, so we'll see what happens with Stags. They are looking to close the sale pretty quickly, I believe in about a week's time. So it is a very, very fast sale to try to get things over the line. And reading between the lines as well, this was actually put into action by a very disgruntled creditor, which I believe is NAB, but I might need to confirm that one, and a fairly sizable loan as well. All right, our second deep dive is the resale market. So Depop are removing their 10% AU seller fee from the 22nd of July. And it appears that this has happened because of Vinted, which is a Lithuania-founded reseller, have launched into Australia on the 1st of July with a zero seller fee from day one. And eBay have also removed their seller fees for small C2C sellers in Australia.
Now, did eBay buy Depop, or am I dreaming that?
I don't actually know. You might have to look that one up.
eBay is acquiring peer-to-peer platform Depop from Etsy. Yeah, that was in February 2026.
Right, okay.
So, sorry, just found it interesting that eBay's changed their terms, so Depop changed their terms as well. But I think, look, in terms of staying competitive, Depop are the leaders in this space. So great that there's that reducing fee. Don't know how they're going to make it up. Maybe it's going to be more ads. I'm not really sure what to expect there.
Well, I think with any marketplace, it's all about the volume, right? So if you get that sales volume through, and they're still charging the buyer fee, so buyers pay 5% plus $1 on orders from there. And you're right, I can see the numbers here. They purchased Depop from Etsy for $1.2 billion USD. The ACCC's cleared the deal, but I think it's when you're that size, you kind of will just make those changes just for the short term. If I were them anyway, it's sort of like an Uber move where someone like, let's say, Diddy comes into the market, Uber will come in and say, well, actually, you know what? We're just going to match you for a little while to make sure that we keep all our drivers still driving on the platform. And then once we've squeezed you out of the market, we will then return back to what we were, which is typical monopolistic behavior. So this is everyone which I think might be on the ACCC's radar, just to have a look at this to see whether if Depop do actually control like a large percentage of the reseller market, which it sounds like they do, that this is one which they always kind of need to be looking out for to make sure that it is still fair for the consumer. But in this way, it's actually good for the seller as well. They haven't changed anything on the buyer side. It's really just encouraging more sellers to continue selling on their platform.
Exactly. And it's kind of that nuance of the consumer is the seller and the seller is the consumer, right? So who are we who are we looking at to protect? I think the conversation around like monopoly, if you will, or owning a lot of the market is tough because that's the value proposition of Depop, where you follow people's profiles and things like that. So you do want to remain on that same platform rather than jumping across multiple. So interesting to see how that will shape up in the space. And I think it's only going to get more competitive, to be honest.
Yeah, resale is on the up, as we've talked about many, many times before, and it's only going to continue to grow for the next few years, I'd imagine. Okay, our final deep dive for the day is the Accent Group takeover saga, which just keeps going on and on. And the latest wrinkle in it is that Frasers from the UK have sold their Malaysian Sports Direct business in order to double down on ANZ. So what they've done is that they sold their Malaysian interests to MAP Collective while continuing to take a royalty from that business in order for them to focus on their Australian takeover bid of the Accent Group, where they have launched a takeover bid offering 65 cents a share. But there's some more interesting wrinkles to this as well, isn't there, Alex?
Well, I was about to say, look, to be honest, I haven't been following this one as much. It's one of those ones where there's like too many big words going on and I go, oh, I don't know, I'll wait for Val to digest that for me. So I don't have that many thoughts, to be honest. I'm just learning this in real time. What's your take so far? Where do you see this going?
Look, I think they're going to, Frasers are clearly committed to forcing a sale, in which case they're going to continue to up the terms. I guess where Accent Group and their independent board committee have rejected the offer is the fact that they feel that 65 cents is actually undervalued for the shares. Because while the Accent Group has actually been contracting, their Sports Direct business is actually growing as well. So as Sports Direct continues to grow, the IBC have said that they feel that Frasers are privy to information in terms of what the future long-term growth is. And Frasers are the Sports Direct, they're the Sports Direct licensor in the UK, also previously in Malaysia as well. So they have a sense for how big this brand is going to go. So I think what they're saying is that because they have this insider information, they're actually undervaluing the shares. So they're not necessarily rejecting the sale outright. It's rejecting the sale at this particular price. So, and I think you'll probably get to a point where both parties will be happy with it. I think Frasers have kind of shown their hand by selling their Malaysian interests for $150 million. It shows that they're committed to actually coming into Australia and taking over the Australia business as well. And as it goes, there's so many economies of scale with having a retailer like Sports Direct rather than having what we have here, which is a fairly fragmented marketplace, because you can share a lot of those costs, a lot of those deals across multiple regions, bring your costs down. So I think it's going to happen one way or another, because I think from the growth from Sports Direct growth, it makes a lot of sense to do that. It's whether the value is right. And I think that's probably where they'll continue to negotiate on.
Okay, interesting. When do you kind of expect resolution or an update? How fast do you think this will move?
Pretty quickly, I'd imagine. Just looking at the numbers and looking at how quickly since it first came out a couple of months ago, every week there's been new updates. There's been new things about it. If it wasn't something which people were considering, there'd be no noise. You wouldn't hear anything. But every week we're getting fresh updates. And this latest move to sell the Malaysian business does indicate that they're extremely motivated. And I think they're working very quickly towards a deal. I think from the IBC side, it's just more posturing to make sure that they can get the best outcome for the shareholders, which, as a fiduciary, is the absolutely right thing to do. Yep. It's just making sure that it is going to be the best deal, and they feel that 65 cents a share is probably too low. I haven't looked at Accent Group's what the share price is currently, but it might be something where I'll take a look at it, come back to you next week with some thoughts around it.
Amazing. Well, great take. Good
All right, that's all we have time for this week. Alex, look forward to seeing you in a couple of weeks' time at Online Retailer. We are only a couple of weeks away. So if you don't have your floor pass yet, make sure you check out the show notes. We still have floor passes available to the Expo floor. Check out the show notes for the code to use there. In the meantime, keep innovating, keep growing, and keep selling. And we'll see you back next week.
We'll see you next week.
Cool. Right on time. All right, you get to your call.
Yeah, thanks, mate. Talk to you soon. Bye.